Now I am showing you the schedule 3. See, I will highlight few points here, but it is good to go through this schedule for your regular work. It will be very helpful for your regular work. Okay. See, if you see here, fourth point, I'm not getting into all instructions. See here, they have started with general instructions. That means how you have to prepare the financials as per Schedule 3, Division 1. The same process is applied even for other divisions also. Okay. Now here, if you see, they have given in fourth point, depending upon the total income of the company, the figures appearing in the financial statements shall be rounded off as given below. Less than 100 crore total income, there are two columns. Total income 100 crore rupees, rounding off to the nearest hundreds, thousands, lakhs or millions or decimals thereof. Okay, so if you see here more than 100 crore, then it should be nearest lakhs, millions or crores or decimals thereof. Okay, so if you see here, your company financials which are getting prepared as per Division 1 should not be in rupees. They have never told to disclose in rupees. If you see March 2021 onwards, everybody started preparing at least in hundreds. If you have prepared in rupees, then you have not followed the instructions. Okay, because as per Division 3, you are giving the audit report, I mean financials, then it has to be, if you see minimum threshold less than 100 crore rupees. That means it has to be in nearest hundreds, thousands, not less than hundreds. So you can give in lakhs also, but not less than hundreds. Okay. If the turnover is more than 100 crore, then it should be minimum lakhs, not less than lakhs. Fine.
Sir, can you please zoom it?
Yeah. What is happening? Are you able to see now?
Yes. Yes, sir.
Okay.
Yes.
Is it fine?
Yes, sir.
See, less than 100 crore rupees to the nearest hundreds, thousands, lakhs or millions or decimals thereof. 100 crore rupees or more to the nearest lakhs, millions or crores or decimals thereof. Once a unit of measurement is used, it should be used uniformly in the financial statements. Okay, that means if you are using for balance sheet rupees in hundreds, then for statement of profit and loss also it should be rupees in hundreds. Schedules also it should be rupees in hundreds, and your notes to accounts also should be rupees in hundreds. It cannot be for balance sheet rupees in hundreds, for profit and loss statement it cannot be rupees in lakhs. You cannot use multiple denomination. I mean, either you have to use any one nearest hundreds or thousands or lakhs, like that. Okay, that is what they are trying to say. Fine. Next point is, except in the case of the first financial statements laid before the company after its incorporation, the corresponding amounts comparatives for the immediately preceding reporting period for all items shown in the financial statements, including notes, shall also be given. So, only for the first year of incorporation, there need not be comparative previous year figures, because that is the first year of incorporation. There will not be any previous year. Okay, but subsequent to the first year, all years should contain previous year figures in all the references, not just in the balance sheet or P&L, cash flow statement, notes to accounts, schedules, everywhere. Okay, I will just show you a couple of financial statements. Are you able to see this?
No, sir. No.
Moonberg Power Private Limited.
No, we are not able to see the screen, sir.
Not able to see. Now?
No, sir.
1 minute.
Accounting channels, please.
Now you are able to see?
Yeah.
Yeah. You see here, they have disclosed only 1 year. It is a private limited company, March 23 financials. Only 1 year they have disclosed. The reason being, it is the first year. But still you see their total rupees in lakhs. That means the total of balance sheet is 1,53,000 only. But still they have disclosed it in rupees in lakhs. They may feel that why for 1.5 lakh, why I should do it in rounding of nearest lakhs. I will show full amounts of balance sheet. Okay, but if you strictly go as per the division, you have to disclose either in hundreds, thousands, lakhs. Okay. Now I come back to again schedule 3. Hope you are able to see the schedule now. Yeah. Now the 6th point, for the purpose of this schedule, the terms used herein shall be as per the applicable accounting standards. You see here. Why this schedule we are following? Because this particular entity is supposed to follow accounting standards. So you have to follow all the terminologies which are being used in accounting standards. While you are preparing these particular financials, you should use all terminologies which are being used in the applicable accounting standards. That is what they are trying to say. Next, they have given a note. This part of the schedule sets out the minimum requirement. See, don't think this is the exhaustive requirement. Okay, see, if I show this much, that is enough. don't feel that. This is the minimum requirement what you are supposed to disclose in the financial statements. Okay, whatever more better way you can disclose, you are always welcome and you have to do it. That is what the schedule says. Okay, and the statement of profit and loss hereinafter refer to financial statement for the purpose of this schedule and notes, line items, sub-line items and subtotals, everything. Okay. Now, this is the format of the balance sheet. Okay. See, now I will show you Raymond balance sheet, March 2023. Okay, 1 minute. I have opened so many PDFs, so I am getting confused. See, this is the Raymond balance sheet. It is running through 183 pages. Okay. Each and if you go through this balance sheet, you will understand completely. But this is, if you see the format, assets is first in the balance sheet, they have given assets. That means they are following Ind AS. Their Ind AS is applicable here. Okay. If you see here in this page, basis of preparation, compliance with Ind AS. Okay. See, they are very clearly mentioning that they have prepared these financials in compliance with Ind AS. Okay, I will zoom it. Is this the message again? Okay, fine. I will share this anyway. This I have just downloaded from the web. I have downloaded a few things so that I will show you practically how what I am saying is how it is getting implemented. There is no my own knowledge here. What I am trying to explain you, Schedule 3, Division 1 and actual financials prepared by some other auditors of some other companies. I am not using my own mind here. Okay, that you please remember. I am only just trying to correlate the norms or procedures which are laid down in Division 1 and how the companies are following it. Our objective is also, after our classes are over, we should be able to provide to your seniors a better financials than what you are preparing earlier. Okay, that is the objective. Fine. See here, if you see here, basis of preparation, compliance with Ind AS. Even in Division 1 also, this basis of preparation will be given. Okay, just I wanted to show you that in case of Ind AS, it is very clearly mentioned Ind AS, and you can see the balance sheet as first assets and then liabilities. Okay. See, now I have selected one balance sheet. Okay. See, usually public limited companies, listed companies balance sheets are available in the net. It has to be available, so you will find it. But private limited companies which are not required to publish to the normal public, general public, then usually it is not available. I searched few balance sheets, tried to get into Google and searched and downloaded. Okay. And I have to select one good balance sheet where I would be able to explain you various aspects. Okay. So I have selected this and I have removed headings and bottom lines so that we do not know which company it belongs to and who has signed these balance sheets and all. And I am presenting here. Okay. Now I am going into the format. Okay, this is the format. Equity and liabilities. Okay, heading 1. Share capital, reserves and surplus, money received against share warrants. Okay, now I am taking to actual balance sheet. Okay, see equity and liabilities, shareholder funds, share capital, reserves and surplus. They don't have share warrants. Okay, so it is not given here. It is not required because they do not have. Okay, now if I further scroll down to the general instructions, they have given certain instructions here. Okay, an asset shall be classified. Okay, this is regarding asset, and then they have given the liabilities that will come later. See here for share capital, because we are in share capital. Okay, for each class of share capital, different classes of preference shares to be treated separately. The number and amount of shares authorized, the number of shares issued, subscribed and fully paid, and subscribed but not fully paid, par value per share, a reconciliation of the number of shares outstanding at the beginning and at the end of the reporting period. Like this, they have given various aspects. Okay, and they have given promoters format also, how it has to be disclosed. Okay, now I will show you the actual one. See, now here you have share capital, note number 3.1. Okay, I will go to 3.1. You see here now 3.1. I will zoom it. There is a glaring because the downloaded copy itself is like that. So just bear with me. Yeah, of course, you are not able to see the numbers, but you are able to see the content. I mean, see, authorized capital 90 lakh equity shares in 2021. Why we are giving like this? Because the schedule says very clearly that wherever you are giving the details, you should give previous year. Okay. So 90 lakh 2021. This is March 2022 balance sheet. I could not find March 2023. So which is very close to our format. So I picked up this equity shares of 10 rupees each. Okay, then issued then 1 crore 70 lakh 14% non-convertible redeemable preference shares. This is authorized capital. And issued and subscribed and fully capital, they have given some numbers. Class A, you see here, class A, class B. Okay, and closing balance is nil for preference non-convertible they were there, and 14% class D. You see, in this equity share capital, they have got two classes of equity shares, class A and class B. This is what here, if you see in the schedule, what they are telling for each class of share capital. Okay, for each class of share capital, you have to give all the details. This is what they have done here. For each class of share capital, they have given these details. Okay, and you read their reconciliation required. So this is the reconciliation. What is the opening balance? How many is issued during the year? What is the closing balance? Like that, it is given for opening. I mean, for 2 years, right? And even for preference shares, the same details are given. Okay. Now further, if you see, shares reserved for issue of options, aggregate number of class of shares. See, for the period of 5 years immediately preceding the date at which the balance sheet is prepared. Okay, you see here, these following details for the period of 5 years also we have to give immediately preceding the balance sheet is prepared. Aggregate number of and class of shares allotted as fully paid pursuant to contract without payment being received in cash. For this details, you have to give 5-year details. Okay. So whatever is mentioned here, as I told you, this is the minimum requirement. Okay. Sorry. This is the minimum requirements what they are asking you to do. So this at least ensure that you are giving in the financials. Okay. You see, we have discussed about accounting accounting standard 1, disclosure of accounting policies. Okay. I told you first sheet it will be accounting policies which nobody touches, right? You see here after the balance sheet, once the notes is started. Okay, I'm just going back to the balance sheet and P&L. Okay. Now this is the cash flow. This is the balance sheet. This is statement of profit and loss. And this is the cash flow. Now you see the notes has started here. Once the notes started, immediately they are giving the significant accounting policies. Always it is schedule number 2. I mean, whether you call it schedule, note number, whatever it is, whatever terminology you are using. Okay. This is always note number 2 because you have to. First point is that what are the accounting policies you are following. If you see this particular organization which I am presenting, they have given each and every standard, they have mentioned the note. See, it started with 2.1 note number, okay, subnote number 2.1, statement of compliance, basis of preparation of financial statements. You see here in Raymond case we have seen Ind AS, compliance with Ind AS. Here you see the financial statements have been prepared and presented in accordance with Indian generally accepted accounting principles under the historic cost conversion as per companies, okay, Institute of Chartered Accountants of India. That means they are saying they have followed IGAP process, okay, understand? Where accounting standards, say read with companies accounting standards amendment rules 2016 applicable with effect from 1st April 2016. Okay, that means while making the financial statements, they have followed IGAP. Where in case of Raymond, which I showed you, they have followed Ind AS. Okay, then use of estimates. Okay, current and non-current classification. Okay, liabilities, assets. Then operating cycle. Okay, operating cycle. Each business will have their own operating cycle. What is operating cycle means? There from raw material to finished product, the duration which is happening, or from raw material to sales encashment is called their operating cycle. If you see here, for a strange thing, operating cycle is the time between the acquisition of assets for processing and their realization in cash or cash equivalents based on the nature of services and the time between the acquisition of assets from processing and their realization in cash and cash equivalents. The company has ascertained its operating cycle as 7 years. They are saying their operating cycle is 7 years for the purpose of current, non-current classification of assets and liabilities for current project under development and 12 months for the other assets and liabilities. What they are trying to say is their operating cycle is 7 years. That means, suppose they have sold, it is a real estate company, okay, that is why they are taking 7 years, because their project duration is 7 years. They are saying if they are selling any flat or whatever their product is today, that means they will realize it within 7 years. Or if they are constructing some property today, they have time to realize the same within 7 years. That means the 12 months, when we have discussed earlier also, I was telling you that within 12 months, then you have to show it in the current assets. If it is more than 12 months, you show it in non-current assets, but that will not apply for this company because their operating cycle is 7 years. So anything which is relating to their business, if it is within 7 years, then it is current. Above 7 years, it is non-current. Okay. If other than other assets and liabilities, they say it is 12 months. Apart from business related, if anything, suppose they have taken some term loan or something like that, then it will be considered within 12 months. That is what they are trying to say. See, this rest of the content of this note, if you see, it is given here itself in the schedule itself. I will show you here operating cycle. You see here operating the operating cycle of an entity is the time between the acquisition of assets for processing and their realization in cash or cash equivalents. Where the entity's normal operating cycle is not clearly identifiable, it is assumed to be 12 months. So the standard, I mean, the schedule says that the same thing they have reflected here. They have not written anything on their own. They have highlighted the same terminology what is being used here, and they have told that their operating cycle is 7 years. If it is not mentioned, then the authorities or whoever is looking at their balance sheet will consider the operating cycle as 12 months by default. That is the reason they have highlighted here that their operating cycle is 7 years. Okay. Next, again coming back to accounting policies. See, these accounting policies, again I am telling you, they have started with note number 2, and each and every standard, every point, every procedure, whatever they are following with respect to plant PP, that is plant property, plant equipment, depreciation, intangible assets, impairment, operating leases. See, operating leases also we have discussed, investments, inventories, okay, borrowing cost. Okay, like this, each and every employee benefits, post-employee benefits, revenue recognition. You see, only accounting policies note is running for 3-4 pages. Related party transactions, still we are in 2.1. Now, 0.3 has started where it is share capital. Understand? So it is very important to state your accounting policies in the financials. That is very important. Okay, see, this is also a private limited company. Why they have very strictly followed all these aspects? Because they are supposed to follow. See, there is no lenience whether your turnover is 1 lakh or 10 lakh or 0. It doesn't mind. You have to follow all procedures. Okay. Again, I will go back to the format. Yeah. Share application money, pending allotment, non-current liabilities, long-term borrowings. Now I will show you long-term borrowings. See, what I am trying to say, if I just read out here and I will just explain you more theoretically, you may not be interested to listen. Okay, that is the reason I have taken one live example to compare this text, whatever they have given, and actual balance sheet which is prepared by some other chartered accountant. Okay, you see here, now I am coming to long-term borrowings. This is what they have given. Long-term borrowings shall be classified as bonds, debentures, term loans from banks, from other parties, deferred payment liabilities, deposits, loans and advances from related parties, loans, long-term maturities of financial lease obligations, other loans and advances specify nature. Borrowing shall be further subclassified as secured and unsecured. Nature of security. Sir, can you move to slide on? Yeah, I am trying to show you the schedule first. Are you not able to see it by?
So we are able to
Okay,
see
maybe,
the
sorry. I am thinking I have actually selected both the sheets. I don't know. Okay. Yeah, now long-term borrowings. Now, I hope you are able to see. If not, please message me. Long-term borrowing shall be classified as bonds, debentures, term loans from banks, from other parties, deferred payment liabilities, deposits, loans and advances from related parties. Okay, and this is under 1. You see here the numbering. Italic 1 is there. Next, italic 2 is there. Borrowing shall be further classified as secured and unsecured. Nature of security shall be specified separately in each case. Whether loans have been guaranteed by directors. Okay, all these things we have to give in detail in long-term borrowings. Now I will show you that balance sheet which we are discussing. So equity is over. Okay, I will share these things. Reserves and surplus. You see here long-term borrowings. Okay, I will expand it. So you may not see the numbers clearly. Okay, you see here term loans, secure long-term borrowings they have given. They have given here non-current portion, current portion, term loans from banks, from other financial institutions. Okay, total they have given. Next, you see here long-term borrowings continued. You see car loan, they have 4 car loans. Okay, amount outstanding, number of installments, amount of each installment including interest. These are the details which are supposed to be given. Have we given any time like this, including car loans? But it has to be given like that. Okay, details of security and repayment terms. Okay, if you see here, they have mentioned this only. Terms of repayment of term loans and other loans shall be stated. You see here very clearly they are telling you to terms of repayment. Okay, this is what they have done there. This is the terms of repayment. Each and every loan they have given, including car loan they have given, details of security and repayment of construction of equipment from Axis Bank Limited, from Aditya Birla, and they have given each in the note previous year figure also. This is balance sheet of 2022. Within brackets they have given numbers of 2021. Okay. Long-term provisions. Okay, we'll come this tomorrow. Okay, I will share all these things. Just give 10 minutes. What I'm saying, if you feel if you are not able to see because of it is downloaded one scanned copy by somebody I could find from which will actually this I have gone through. It is very close to our schedule. Okay, that is the reason I have picked up this. Okay, give time for 10 minutes, whatever I have told, you will be able to benefit from this. Okay, and see, many people have not given those reviews 1, 2, and even feedback also. I request everyone to attend to it. Okay, thank you.